Welcome to my channel, CA Academy. Very important topic, that is non-compliance with laws and regulations plus audit opinion, that is SA 250 plus SA 705. You are auditing a manufacturing company. During audit, you discover GST liability underpaid for 2 years, environmental penalty imposed but not disclosed, income tax demand under litigation. Management says, don't worry, nothing serious. Now pause. As an auditor, your job is not to panic. Your job is to apply SA 250 and conclude under SA 705, that modified opinion, right? First, SA 250 deals with auditor's responsibility relating to laws and regulations. Remember, auditor is not responsible for preventing non-compliance, but is responsible to ensure financial statements are free from material misstatements due to non-compliance. Two categories of laws. First, laws with direct effect on financial statements. Examples: Companies Act, Income Tax Act, GST Act. These affect amounts and disclosures directly. Auditor must obtain sufficient appropriate audit evidence. Other laws, indirect effect. Examples: environmental laws, labor laws, RBI regulations. Here, auditor performs inquiry of management, inspection of correspondence with regulators. What are the steps to be taken by the auditor? Identify non-compliance indicators, red flags in case studies. What are the red flags? Penalties imposed but not recorded. Contingent liability not disclosed. Show cause notice ignored. Management refusing legal confirmations. Regulatory inspection reports hidden. The moment you see this, think SA 250. Step 2. How to deal with them. First, understand the nature of the non-compliance. Is it procedural non-compliance, financial non-compliance, criminal non-compliance? Discuss with management. Obtain explanation and documentary evidence. Evaluate financial impact. Provision required. Contingent liability, disclosure. Seek legal advice if necessary. Communicate with those charged with governance. Documentation is compulsory here. Case study 1. GST underpayment not provided. Company underpaid GST of rupees 500 crores. Department issued demand notice. Management believes appeal will succeed. No provision on disclosure made. Auditor's analysis, law with direct effect. Demand notice exists, probable obligation. As per accounting standards, provision required if probable. Reporting under SA 705. If management refuses to provide disclosure, material but not pervasive, give qualified opinion. Material and pervasive, give adverse opinion. Case study 2. Environmental penalty not disclosed. Company fined 220 crores for pollution. No mention in the financial statements. This is non-compliance under environmental law. Even if law is indirect, impact on financial statements is direct. If disclosure omitted, financial statements misleading. Opinion modified under SA 705. Case study 3. Auditor unable to obtain evidence. Company involved in FEMA violations. Management denies access to legal correspondence. Now problem is scope limitation. If material, qualified opinion. If not pervasive. If pervasive, disclaimer. Because auditor lacks sufficient appropriate audit evidence. Now, under Companies Act, reporting requirements. Example: fraud reporting obligations. Auditor's duty overrides confidentiality when law mandates reporting. If non-compliance indicates fraud, linked with SA 240 also. This shows professional maturity. Second step, linking SA 250 with SA 705. Here, an auditor is not a lawyer, but an auditor cannot ignore violation of laws.